We've been getting your opinion from across the board. My colleague Rachna Dhanrajani now joins us from the National Stock Exchange, the country's largest exchange. She spoke with Ashish Chauhan, Managing Director and CEO of the NSE. Let's take a listen.
On this auspicious day of Diwali and Hindu New Year, I'm here at the National Stock Exchange in Mumbai's BKC and I'm joined by Mr. Ashish Kumar. Thank you so much, sir, for joining us and happy Diwali to you. I'd like to start by asking, sir, this year has been quite tough. Geopolitical tensions, but we also saw some green shoots. US bond yields hit 5%. What is your outlook for the upcoming Samvat?
Happy Diwali to you and all the viewers of CNBC and also wishing them a very prosperous new year. I hope and pray that the next year is even better than what we have seen this year or many previous years. In a way, the world has seen many issues over the last 3 years, including COVID, which was one of the very rare occasions, probably once in a 100-year event. And then we have seen also inflation inching up to simultaneous wars going on in Ukraine and now Israel-Palestine. And so you have an issue on the inflation that was going up, the American and European interest rates started going up, and that was basically putting a lot of pressure on investments from abroad into all developing markets. And at the same time, because of the war, the prices of commodities were trying to go up, especially food grains and things like that, plus also oil. And all three had a lot of impact on India's economy. Fortunately, good management by the RBI and other policymakers has ensured that our inflation remains under control. Our foreign currency reserves are reasonably good. And at the same time, because of what has happened over the last entire year, that inflation is now getting controlled by rest of the world. Job markets there are softening a little, and that's where basically I see the interest rates have already come down over last 1 week. That's a good omen for India. Oil prices have come down over last 1 week. Again, it's largely because of softening of the economies in the Western world, but also China not expected to consume a lot of energy and many other commodities. That's where China is slowing down. And that is also an opportunity for India. So overall, India has a lot of opportunities. India also has been doing exceedingly well in remittances and also services, which has helped us keep our balance of payments in a healthy position. And that's where I think overall all situations are aligning. Of course, the rest of the world, whatever problems happen there, we need to have that strength in our foreign exchange kitty and also our own strength in our own growth, which is basically the domestic demand, which is going to increase because the China has become old, Japan is old, Europe is old, America is getting old. We are the only young country which will also require a lot of housing, a lot of clothes, a lot of iPhones and other phones and a lot of other demands. And that's where I think everyone is looking at India for next 20, 30, 50 years horizon. And probably that is true that in some ways we have been funding our own growth over the last 3-4 years, more than the foreigners have funded. But I think increasingly our youngsters are earning more than their parents and they are saving a lot and they are now investing through stock markets. So overall, I see that the same people who used to invest in gold and silver and real estates are now coming through mobile phones into the stock markets to invest. My only request to them is morning buying and selling in the evening is not called investments. Invest for long term. If you don't have time, if you don't understand, go through mutual funds, go through portfolio management schemes, go through financial advisors, but do invest in India's future, do invest in stock markets.
Sure. So the upcoming year is of general elections. How do you see that would change or impact the market in any way?
It is in a way a risk what happens to the Indian general election, because we have now 3 state elections coming, but more importantly, what happens in April, May when the general election comes. And what we have seen over the last 30 years, that whichever party wins, finally the policies remain the same. That is growth orientation, less inflation, and supporting Indian entrepreneurs and Indian investors. So we feel that overall the future of India is looking brighter, and naturally whichever party comes will have to continue job creation, control of inflation, promoting business and trade with other countries so that Indians and their technology savviness ends up getting more and more business from abroad into India.
Sure. Lastly, sir, there's been a lot of chatter, especially this year, about getting Diwali holidays, like a longer holiday like US gets for Christmas and New Year. What is your view on that? Do you see this happening anytime soon, or do you propagate for the same?
No, in a way, India has basically a very tight schedule of markets. Indian markets get around 52 weekends, which is 104 days, and 10 days of holidays. And they are distributed across many holidays, including some specific national holidays like August 15, January 26, and I think April 14th. But eventually you get to allocate a few days for Diwali, few days for other holidays, and probably that would continue in the long run, because both exchanges used to have a very long number of holidays or large number of holidays before, but slowly with the interaction over so many years, slowly the number of holidays have been kept to what we call reasonable numbers, and I don't know whether there is any need or there is any thinking about increasing number of holidays as of now.
Okay, well, that's the top boss at the National Stock Exchange, the country's top exchange. It's been a fruitful